Good morning, everybody, and welcome to the Barratt London webinar this morning. Thank you very much for joining us. We have a fantastic panel of experts across the industry joining us today. Just before Asel introduces the panel speakers for today, I'd just like to run through a little bit of housekeeping with you and also give you a little bit of an update on the company as well. So, as usual, for those of you who haven't joined us before, this is the screen that you're seeing in front of you at the moment. A couple of things I'd like to draw your attention to. So on the right-hand side, we have a live questions and answers section. Here you can post any questions to our panelists this morning, and we will be having a Q&A session at the end of the sessions and running through all of your questions together. So please feel free to send over your questions throughout the presentation this morning, and we'll do our best to answer them. The other section that I'll draw your attention to is the closed captions and subtitles. So if you click on the closed captions button at the bottom here and then select your language, then you'll be able to follow along on the presenters' presentations in your native languages. And we have Arabic, Chinese, Russian and Turkish loaded onto the webinar this morning for your enjoyment and ease of use. So just a brief overview of Barratt London. We are a FTSE 100 company and we're the largest developer by volume in the United Kingdom. We have a national footprint delivering new homes throughout Britain, and we operate through our 6 regions and 27 operating divisions. We build both private and affordable housing, and in our last financial year we delivered over 17,500 properties. We have a broad product offering with prices from £70,000 across the UK up to around about 3.5 million in London. The company was founded in 1958 by Sir Laurie Barratt, and for those of you who don't know the story, he couldn't afford to buy his own property, so he clubbed together with some friends, they bought some land and they built more properties than they needed, selling the excess, allowing them to then afford their own family home. And that's really been the guiding value and principle of the business since then. So we deliver good quality, affordable housing across the country for people to live in. The company was listed on the London Stock Exchange since 1968, and we build the highest quality homes, and we have just been recognised for the 11th year running as a 5-star home builder by the House Builder Federation, which means that 90% of our customers would recommend us to friends and family. We have more external NHBC awards for build quality than any other developer for the last 14 years. And we have a lot of Pride in the Job awards across our construction sites as well. So in these uncertain times, it's very important to underwrite the confidence and deliverability of our product and ensure that our company is in a very strong position to weather any storms or uncertainty. So last year, we increased our operating margins to 18.9%, which was a 1.2% increase. And our profit before tax was 909 million, just under that £1 billion mark. Our return on capital employed was 29.7%, an increase of 1% on last year as well. And net cash on account was £765 million. So we're in a really strong position. And that's really underpinned by 4 main elements. The first is that we're very focused and we're delivering a lot of help to buy product for the government, and it's one of the best supported industries as far as public funds and support coming in to help our industry grow from the government. So despite any other stimuluses that are going on, we have a very strong government-backed product in the Help to Buy category. We have very, very positive lending environment at the moment. We have excellent rates. I'm sure Beya is going to talk to us a little bit more about that later on, but we have unprecedented, historically low borrowing rates for people to purchase property. We have a very attractive land market, and we are still continuing to purchase land and look at new land opportunities throughout this period. And really that's driven by the underlying demand for housing across the UK and from our government. So the target that's been set for the industry is 300,000 homes per annum. We don't, by any means at the moment, we're not delivering that. So the demand still remains. So our business model there, we've been through it in detail previously, but we really focus on construction excellence, good quality property, outstanding designs, and of course we choose areas of regeneration and locations that we believe are going to grow in the medium to long term. We have excellent financial results, and we do focus on our customer service as well. So it's very important to us to make sure all of our customers are happy now, previous customers and future customers as well. And we continue to innovate with our sales and marketing. So we currently have on the webinar this morning 142 people, all of which are our business partners and our agent network across the globe. And without you guys, we couldn't distribute our product as widely as we do. But we utilize the Barratt International app, and we're in the process of building a new agent portal, which I hope we'll be able to deliver in the next week or so. So without further ado, I'll hand over to Asel, who's going to give you a brief overview and introduction to the webinar panelists this morning, and then we'll go through their presentations. I hope you enjoy the webinar this morning. Thank you.
Good morning, everyone. This is Asel. Hope you are all well and safe and enjoying this beautiful sunshine today in London, if you are in London. So I would like to give you a little bit of information what we are going to talk today. So we have Jonathan Neilan from Quastels LLP, who is going to go through the conveyancing process, AML documentation, and how they can benefit at the current market situation. After Jonathan, we have Beya Saadi from Hayat Private Finances. She will go through the mortgaging process, offer qualifications, decision in principle, payment types for mortgages, and so on. And we also have Dmitry Zapol, who is the international tax advisor at IFS Consultants. He's going to give a general taxation in England for individual landlords, overseas landlords, and SPVs, as well as the income tax, landlord tax, and inheritance tax in general. And we also have Mark von Grunder from Benham & Reeves, who is going to talk about how we work together with Barratt London and Benham & Reeves to support rental guarantee and the current rental market in London. And he will go through his company in general. So first of all, I would like to introduce you to Jonathan Neilan, who is an experienced real estate partner and has been acting in the commercial property and new build sector since 2000. He advises on all type of commercial and large-scale residential property transactions, including purchasing and financing sites and dealing with their subsequent disposals. I have known Jonathan for more than 10 years now, and I would highly recommend him as an efficient and experienced solicitor who deals with overseas clients from Middle East, Russia, Turkey, and all over the world. Jonathan has also a multilingual team who speaks Mandarin, Cantonese, Arabic, Russian, and Ukrainian languages. They are only one call away from you. Let's start with Jonathan's presentation, who can provide you with the conveyancing process in England and touch base on stamp duty.
Asel, thank you very much for that introduction, and thank you, Stuart. Hello, everyone. I've been asked initially just to give some background on Quastels, where I head the residential conveyancing team. Quastels was founded almost 20 years ago now with the merger of two other long-established firms, SPR, Avery Midgen, and Quastels. The practice has been going for very many years, and we now consist of 14 partners with a total headcount of 48. And we aim to provide a very personal service from specialist legal advisors, not just in residential conveyancing, but in litigation services, immigration, business ventures, wills and trusts. And at Quastels, we really look to put ourselves in the shoes of the clients and consider what is the best advice for their particular position. We're very much looking to provide tailored specialist advice. In the conveyancing department, we're approved by all major bank lending panels, which means we can act for both the bank and the borrower in the conveyancing transaction, which should save the client's costs of not having to pay two sets of solicitors. We're accredited under the Law Society's Conveyancing Quality Scheme, which is a kite mark to encourage transparency and efficiency in conveyancing. And we've always worked very closely with estate agents, other solicitors, and mortgage brokers in the conveyancing transactions to ensure we have a smooth transaction and we meet the requirements of the Law Society's conveyancing quality. Now, during COVID-19, we are fully remote and we are providing our services as normal. Fortunately, at Quastels, we made the decision to go paperless over a year ago. And we've also already set up remote working for all of our staff. We've been looking to attract top quality solicitors through having remote working and a quality work-life balance with flexible working hours. So we've been well set and well prepared for the adjustments we've had to make. And we've not actually seen any significant reduction in the time it's taking us to process transactions. So turning over the slide, I've just put together a note of some of the quality clients who've chosen Quastels to act for them, which just gives you an indication of the quality of the service that we provide and the trust that clients show in us. Now, starting with the following slide on the UK legal system, I thought it'd be helpful just to put some context into the conveyancing process and to set out the fact that the UK legal system is a system that's developed over centuries. As such, it's internationally recognised and it's trusted. We see overseas companies coming to London to use the law courts to settle disputes because they know there's certainty of law here. The UK Land Registry has been developing its records over a period of nearly 100 years now. So this means that as a buyer solicitor, it's very simple for me to check that the seller actually owns the property. And similarly, the local authorities retain electronic records of planning permissions and building records. So again, it's very simple as a solicitor for us to verify that the developer has obtained the planning permission and is doing what it should do as part of the development. On top of that, we have a long-established regulatory regime of solicitors being regulated by the government to make sure we act in accordance with strict professional criteria. So that's the context in which the conveyancing process operates. And as we move on to the next slide, I've set out briefly the steps before an exchange of contracts. Initially, it's up to the seller's solicitor to prepare the full title pack and to present that to the buyer solicitor. It's up to me as the buyer solicitor then review all of those documents and to verify that what I'm being told is accurate. And that will include lodging various property searches. The most important is probably the local authority search, which is a search of the local council's registers, where we're looking to establish that the property has planning permission and that the council hasn't served any notices for any breaches of local laws. Now, that search is the one that's probably most frustrating to most of the property agents out there because it's the one that takes longest to come back, normally about 10 working days. But in these times, the time periods are wildly different from local authority to local authority. The other two important searches are the environmental search, where we check if the land is contaminated, and it will also reveal whether there are any major infrastructure projects in the area, such as a new railway. And in the times of global warming, the flood search is particularly important, where we are checking the likelihood of the land being subject to flood during whether heavy rainfall or river or sea flooding events. Now, all of this information will be brought together in one report to the buyer, and that report will be emailed over to the buyer so we can easily deal with the reporting process to clients who are overseas. We also deal with any questions the buyer will have as a result of that report, whether by video call, personal attendance or a telephone call. If a buyer's happy with everything he's read and he wants to go ahead, that's the point that they sign the contract and send the 10% deposit to the buyer's solicitor. Once we've got that signed contract, which can be sent to us electronically, there's no need for the buyer to actually be in the UK for the purposes of exchange. We then arrange a telephone call with the seller's solicitor where the contracts are actually exchanged. That's the moment that we agree to date the contract and to commit both parties to the purchase. Up until that point, either party can change their mind and withdraw from the transaction. The purposes of having the exchange is to have given the solicitors an opportunity to have checked everything, and so the buyer is entering into that commitment with full knowledge. So moving on to the next slide, we have the steps that are taken after exchange of contracts. Immediately we've exchanged, the buyer solicitor would send the 10% deposit to the seller solicitor, which would be held in an escrow account. Sometimes that deposit is released if it's insured against the developer becoming insolvent, and they're matters that we would have explained to the buyer in our pre-exchange report. If the property's off plan, then there's not a lot to do until the flat's nearly finished, at which point we'll be renewing our property searches and liaising with the buyer for him to sign any relevant documents before completion, and for arranging for him to send funds to us to complete. At the same time, we'll be liaising with the bank to arrange for the mortgage funds to be sent directly into our account. Most documents can be dealt with electronically, but we would need a hard copy mortgage deed sent back to us for completion. Similarly to exchange, there's actually no need for the buyer to be in the UK for the purposes of completion. It can all be done remotely, although we do recommend that the buyer takes the time to inspect the property on or around the completion date. Once we've completed, it's the buyer solicitor who deals with paying the stamp duty. All of the funds, the exchange deposit, the completion monies, mortgage funds, stamp duty, they all move through the buyer solicitor's bank account to ensure the funds are protected. And we then deal with registering the buyer's ownership at the government land registry, where the buyer will then obtain his title document. Now, the actual registration of the buyer, if he's buying a flat, he will be getting leasehold title. On the next slide, I've set out a few comments on leases. All apartments in the UK in London are held on leases. I often get asked, why am I not getting a freehold property? I prefer freehold. I want to absolute ownership. But really, leases are a very practical structure of ensuring the block of flats can be maintained properly. If everyone were to have a freehold ownership of their own structural walls, if they could do what they wanted in their apartment, it would be very difficult to regulate the proper maintenance and a proper insurance of that building. The leasehold structure provides a very reliable and tested way to ensure the services are delivered and that everyone can benefit from a properly maintained property with properly maintained regulations. So a lease will commonly incorporate good neighbour provisions to make sure you can't have nuisance pets, to make sure you can't undertake alterations that could adversely affect how the outside looks. Another question I get asked quite often is how long should my lease be? Well, there's a bit of an obsession with leases being 999 years, but then they don't have to be that long. Lenders for new build properties will accept leases for 125 years. A 125-year lease is perfectly acceptable. You don't really have to worry about the property's value being affected until the lease is running significantly below 90 years, even 80 years. Now, the main two outgoings under a lease will be the service charge and the ground rent. The service charge is a fair and reasonable proportion of the landlord's costs in providing the services to the development, and the ground rent is a nominal payment recognising the existence of the lease. So moving on to some comments on stamp duty land tax. Stamp duty in the UK isn't based on 1% of the whole purchase price. It's now banded. So, for example, there's no stamp duty to pay on the first £125,000. The next £125,000, the rate is 2%. So, for example, if you were buying a property for £600,000, that would give a total stamp duty payable of £20,000. Now, for those buyers who own second properties, they are disadvantaged by having to pay an extra 3% stamp duty. That's 3% based on the whole purchase price. Because of this, we've seen some clients choosing to buy properties in the names of their adult children who may not own other properties, and therefore avoiding the 3% stamp duty. If you're in the position fortunate enough to be able to buy 6 properties, you can benefit from a reduced rate of 5% stamp duty if the purchase is structured correctly. And I expect you could probably also benefit from a discount from the developer if you're fortunate enough to be buying 6 properties as well. So certainly something to look at that's a benefit that a lot of people aren't aware of. Now, last month we did have the UK annual government budget, which announced that there would be a change in stamp duty for overseas buyers from April 2021. Now, that announcement provided that from April 2021, there will be an extra 2% stamp duty payable by overseas buyers. The government hasn't defined what will constitute an overseas buyer yet. We expect it to be someone who spends less than half the year in the UK. Now, this will only come into effect from the 1st of April 2021. So if you complete your purchase of property before 1st of April 2021, you will avoid that extra 2%. It also doesn't apply to contracts that were exchanged before the 12th of March 2020. So even if you exchanged 6 months ago but are completing in June 2021, you won't be subject to those new rules because they're not retrospective. Now, should a client choose to instruct Quastels, there are various identity documents we will need to be provided with. The principal one is the passport, and the secondary document is a proof of address, which is normally provided by a bank statement, which serves the purpose of also showing that the client has funds available for the property. If we're not meeting the client face-to-face, then those documents do need to be certified by a banker or an accountant or a notary or another solicitor. With COVID-19, we are progressing transactions through these documents being presented over video calls, and we are taking a pragmatic approach as to identifying our clients and being satisfied that they are genuine and that their source of funds are genuine. But we will need to be provided with certified documents once the restrictions are released. We also issue a short and simple source of funds questionnaire just so we have some background information on how the client has made their funds. And this is all to comply with the EU anti-money laundering regulations. Now, those documents, as Asel mentioned in her kind introduction, can be presented to us in Chinese, Arabic, Russian. We do have language services at Quastels, so we are able to receive documents in clients' native languages and to translate them within our offices. Finally, I would just add that as a Quastels client, one can expect a first-class, cost-effective and personal legal service. And I've just put a note of that on our last slide. And finally, there's a biography on this slide following, which Asel kindly ran through in her introduction. Thank you all very much for your time. I am available for the question and answer session as we progress throughout the webinar. Thank you.
Jonathan, thank you very much. It was very, very informative. And moving on to our next panelist. Our next panelist is Beya Saadi from Hayat Private Finance. Beya is a highly successful and qualified mortgage and financial advisor, and she has over 10 years of experience in financial industry. Almost 80% of our Middle East clients' mortgage inquiries go to Hayat Private Finance with a very high success rate. Beya, also multilingual, she is fluent in French and Arabic and obviously English language, and she also holds certificate in mortgage advice and practice. And she will explain about mortgage and financing process in England.
Thank you so much, Asa, for the introduction. Hi, everyone. Hope everyone's keeping safe and well. I would like first to introduce myself. My name is Beya Saadi from Hayat Private Finance. We are specialized in offering mortgages and protection advice to a wide variety of customers looking to purchase property in UK. We deal with British national and foreign national based in UK, and as well expats, foreign national, people who live abroad, high net worth, whether you're buying your first home or investment, commercial, your mortgage can pre-approved in advance, and it can save you money and as well time. I don't need to say about myself. I felt she did well. So let's just go to the topics, what we're going to talk about today. Today we're going to talk about, it's the second slide, we're going to talk about the current state of the market, lending criteria, offer qualification, decision in principle, and payment type, product type, buying and mortgage process, and equity release. Let's start first with the next slide, which is the current state of the mortgage market. You know the current situation at the moment, and with the corona and all the situation all over the world, they reduced the rate, and especially here in UK. So some of the lowest interest rates recently can see in the history. The rate is really low, so it's good time to buy if you're thinking to buy at the time. And as well, the currency, it's very low as well. So you can benefit from the foreign exchange and get much better maybe property than you think about it before. You cannot afford it, you can afford it now. As well now, most of the transaction is going through a mortgage broker. Lender, they prefer to deal with a mortgage broker because they know what they're doing. They do their due diligence properly. And as well, I'm qualified by the FCA. So this helps so much as well to deal with the lender. More comfortable, and we know the criteria of each lender. We know what we're going to provide them as a document, what the clients need, and criteria and the requirements. We as well received some exclusive deal and rates. You cannot get it directly when you deal with the client with the bank directly. So the next slide, we're going to talk about lending criteria. Of course, with the lending criteria, there is a lot of attractive criteria. We do not expect it. For example, lender now, they're happy to provide mortgage for limited company. It's not now, from before as well. And SPV purchase as well. You can get a Sharia Islamic mortgage for those who have religious beliefs. You can get a mortgage up to 80%, of course, for the right person, and depend on many factors. It's the income, the deposit, a lot of factors. And then, of course, the client's need and requirements. We can get a rate between 2 to 4%, of course, as the same things depend on many factors and which lender we're dealing with. The good things as well, I think my colleague Jonathan mentioned that it's about the stamp duty. So we can, what we can do here as well, we can provide a guarantor. So the client, if he, example, has many property and he doesn't want to pay more stamp duty, extra stamp duty, 3%, he can put the property under his kid's name and will be just the guarantor. So, which means he saves some money. Or example, he wants to help his son, or example, a sister, whatever, and this person cannot afford it. We can use the guarantor to help to find this person and help them to buy his first property, example, or investment. And at the same time, their names will not be in title deed. So this is one of the attractive criteria we have in the market at the moment. The next slide, we're going to talk about offer qualification and how much is important at the moment. One of the reasons sales fall through is because the correct due diligence is not carried out when the sale is agreed, or the buyer get a little confused how much they can afford. So you need to make sure all the offers are qualified properly by a mortgage expert, which will help to increase the chance of your sale actually completing. And this is what most of the people forget about it, the salespeople or whatever. So they need to make sure all the transaction, it's very easy process. You just send the client. I did that many times with Barratt homes with a lot of state agents, and it saved them so much time. I had one of the state agents, I remember, been dealing with this client for over a year, trying to get him all kind of property for above 2 million, and then they send it to me. They say, "Can you please check his financial?" When I checked, this client cannot even afford 400,000 property, and then I told them this is his budget. If you want to close a deal with him, you need to look for a property around 400,000. So it's very important to get this practice into your routine if you want to close so many deals. Okay, and as well help you if we get dealing with the client, help you to get all the AML done, because through us we can receive all the documents, check them. If you need the client, you can certify all the documents, and easy to submit the transaction to the bank, and as well as acceptable by developer to get the documents certified by us. Now we're going to talk in the second page about a decision in principle. And it is very, very important at this time, especially people who are buying off plan. It's a very useful tool to use. So people who has concern and they worried there is no lender going to get them the mortgage, they can use this. They can approach the mortgage broker. We can get them this done in advance before even go and do their searches. It's very important. So what is decision in principle? It's a statement from the lender saying that they lend certain amounts to you before you finalize the purchase of your home. Okay, so as we said, it give you very comfort, give you the comfort, it give as well reinsurance to you, and a lot of developers, sellers, they feel you are more serious when you get decision principle in place before you put your offer or negotiate even the price. So now we're going to talk about type of payment, which is the next slide. So we have here in UK two kinds of payments. So we have the interest only and the repayment. So repayment, it means like you paying the mortgage, the principal, plus the interest. So if you keep paying it during the mortgage term, the term can be from 5 years to 30 years, depend on the retirement age and many factors. So if you keep paying it, by the end of the term, your mortgage will be zero. So you end up paying off all your mortgage. The interest only, it's interest only. They use it for mostly for investments and for high net worth as well. So the interest only means you're paying only interest during the mortgage term, and by the end of the term, your mortgage is still the same. This is only if you don't do any overpayment or you pay off some of the mortgage. So a lot of people as well prefer this if, example, they're financially, they feel they cannot afford to pay big amount of mortgage at the time, and maybe in 2 years' time they got a deposit, or they have a lump sum they can pay the sale of a house. So you need to have a strategy plan in place before you take this type of payment. As I said, it's most likely most of the people they use it, either investor for buy-to-let, so the rent will pay the mortgage and they don't pay anything extra from them, or some high net worth individual who knows they have, example, a good income, a good example investment coming, or they're planning to sell the property in the end of the term, or remortgage the same property. So this is for type of payments, and then we go talk now in the next slide about type of rate. Okay, so in UK here we have we have a lot of kind of product, but this is the main product we use it, and most of the clients use it, and they know it. So we have the fixed and the tracker. So the fixed rate, it's used by people who like to budget. They want to just they know every month they will pay £2,000. Not going to go up, doesn't go down, and they want to manage their life. So it's easy for first-time buyer, for people who, like example, as I said, feeling that they want to feel safe, they don't want to risk it, or they think, example, the market is going up. The rate is a bit higher comparing to the tracker, but the good things about it that you're comfortable that you're just paying this amount every month. The product can be from 2 to 3 years or 5 years. So if it's the 2 years product, it's much less lower than the 5 years product. Okay, but some people, they prefer to just get the 5 years product because it's a comfort for them that they're not going to deal with this transaction for long. But they will miss a lot of opportunity in the market, because if in 2 years time they will miss, example, a remortgage, maybe they're going to find better rates through us with different lender. So a lot of people, I advise them to do 2 years it if they want to fix it, because there is a big hefty redemption fees for 5 years rate. The tracker, it's more flexible. It's margin. The bank have his own margin plus the Bank of England rate. So it will track Bank of England. At the moment, Bank of England rate is really, really low. So we'll track it. So now most of my clients who's having this product, they really happy with it, because they're benefiting a lot from the market at the moment. And we're expecting the market to stay low for certain time. So it's a good product. Of course, they have as well the risk. They might go up. So this as well can be risky, but not going to be really high, because here they always consider all the, they try to protect the client. So it's not that risky. So now we finish from the rates. We're going to talk about the mortgage process. It's in the next slide. So the mortgage process, as we said, the first things we need to put in our usual practice is the offer of qualification. So as soon you have a client, or you want to buy a property, the first things you do, you need to go to a mortgage broker. The mortgage broker will assist you all your needs and requirements, check everything. Of course, if you're buying, example, a new build or off-plan property, we can get you as well at the same time if we receive all the requirement documents, which is, the fact-find form, the bank statement, proof of address, proof of income, proof of deposit, all these commitment statements, all this. If we receive all the documents, we can get you as well at the same time decision principle if you would like to exchange, or you would like to reserve, or start negotiation. So it's a good tool to have these from the beginning before you start any transactions or start any negotiations. Okay. So let's say we received all the documents, and I send the client the recommendation for the best deal in the market. Then we can get you, as we said, decision principle, submit the application. Once we submit the application, Then if the lender is happy with all the documents we received and all the information, and they did their due diligence, then they approve the transaction. This means if it's been approved, it's 90% that everything is in order, and that's that we are in a few steps to get the mortgage offer issued. Then what they will do, some lender, they'll give you the offer after the approval, and then they will instruct valuation. Some lender, no, they will instruct the valuation, then they send you the offer, but the same. So let's say that we instructed the valuation, we received at the same price of the market, okay, and sometimes it's lower, but still the client go ahead because some lenders are really strict with the valuation. Anyway, and then they offer the issue. They issue the offer. If they issue the offer will stay valid for 3 to 6 months. The client, once they issue the offer, of course, we send it to the solicitor. The bank already will send it to the solicitor, but we will send it in case he didn't receive it. And the solicitor will start to prepare for the exchange. Of course, do the due diligence because the bank will have a solicitor. You need to deal with the bank solicitor. You need to deal with as well the developer solicitor, and you need to do the due diligence. So once he's ready, he will exchange. The client needs to have 10% cash. They cannot borrow it from the bank. It should be from 10 or 5%, depends what he's buying. So he can exchange. Okay. So once he puts the 10%, he cannot turn back, and they need to know when they can complete. Of course, this all will depend on the solicitor. If he did all the due diligence, everything is done, he verified all the term and condition of the lender, and as well the requirement from the developer. Sometimes we deal some lenders, they don't have solicitor, is very straightforward, but most of them you need to deal directly, and it's a lot of requirement as well. The mortgage process is between 2 to 12 weeks, depend on the lender and how much the application is, if it's like complicated or not. Okay, of course, we'll manage all the process from the beginning until the completion, and we try to work parallel with the solicitor and with the developer and estate agent whenever they need from us help and assistance. So now we finished the mortgage process. We can talk with about 2 tools, very useful, especially at this period. So firstly, benefit equity release. At the moment, I'm doing 2 cases, and it's about equity release because some clients, they don't have enough cash, which means, especially now, like maybe the bank is closed, maybe like certain situation, they have something, they couldn't take the funds out. So if they have an asset here in UK, we can use this asset to release some funds, okay? And then this funds, they can use it either to buy fully the property or as a deposit, and the rest they can take a finance from a lender, and then they can buy the property they want, either for investment. So if it's for investment, the rent will pay the mortgage, and they not be committed with any, payment, monthly payment, or they want as a holiday home, depend what their situation. But it's very good, and I have few cases now like that. Most of the clients, I suggested to them, and it's very, very good and successful as well. And it's good to expand your the client portfolio as well. And then we will talk about now the leveraging. So leveraging is using debt to increase the potential return of the investment. On the investment. Let's say example, of course they do it for real estate. So let's say example, a client come to you and he has 1 million, okay? £1 million, and you're excited, yeah, 1 million, let's let him buy this property. But it's not right to think like that. This 1 million, he can put an example, I would deposit to buy bigger property and get a bigger property if they want, or this 1 million, instead just buy a property cash for 1 million. After 10 years will be 2 million example, or 15 years 2 million. This property, this money, he can use it to buy 4 property for investment, okay? take a 75 LTV and buy to let renting, so the rent will pay the mortgage, and like that you will be helping the client to make his portfolio bigger and his equity bigger, because in 10 years time this will be 8 million instead having just 2 million property, 8 million property, and you have bigger portfolio. So the last page, which is my contact details. I hope everything was useful, and thank you really so much for listening to me. My contact details there. You can see my email, Beya@Hayat Private Finance, and my contact numbers. I'm available on WhatsApp, phone calls, whatever you need. I'm here to help. Thank you so much for listening, and have a lovely day.
Thank you very much, Beya. It was really, really informative, and you provided quite a good information. We do have some questions during your presentation, which we are going to ask you at the end of the presentations once everyone finished.
No problem.
So now I would like to introduce you Dmitry Zapol, who is an international tax advisor at a London-based private consultancy with practical knowledge of the principle of individual and corporate international taxation and cross-border business planning. He has an excellent understanding of UK tax system, particularly in dealing with international transactions and individual tax planning, especially connected with immigration. He also has a good understanding of the major European tax systems like Austria, Luxembourg, Netherlands, and Switzerland. So, Dmitry.
Okay, Asel, thank you very much for this introduction. There's not much to add to it other than we do a lot of property transactions, both in the context of de-enveloping and reorganizing new structures and new property acquisition. Now is the great time to hold such tax seminar, because the new tax year in the UK has just started, and many new developments have been introduced in the tax scene. So let me cover this. So let me cover them step by step. So if we could turn to my first slide, please, where I'm summarizing various taxes that a person willing to invest in UK real estate has to consider. This is a very broad overview, and it will be followed later by a more detailed analysis. So I've tried to conveniently split different taxes by various stages of property acquisition, ownership, sale, and passing it down the line in case of death. Let me begin with stamp duty land tax, which every person must pay when they are acquiring property in the UK. Jonathan Neilan in his presentation summarized it really well, and I will just add a few practical points to consider. To begin with, most foreign owners who are looking to invest in UK property already have residential property abroad, either in their names or in the names of their spouses or minor children, which means that most such clients have to pay the additional rate of tax, which brings the rate of stamp duty land tax to anything between 3% and 15%. And as Jonathan mentioned, it may go up to 17% in 2021. Now, I've seen on numerous occasions parents gifting money to their children to allow them to buy UK residential property. At the same time, such children often own shares in their properties, well, in the family properties located outside the UK. And often we are considering such children selling their properties to their parents, or even gifting such foreign properties to their parents before they purchase UK residential property to avoid the 3% stamp duty land tax. This often works well, except that we must not forget that if a person is living in the UK and is tax resident in the UK, any gift or any sale of a foreign property may trigger UK tax consequences. And for such children, often the only solution is to claim the remittance basis of taxation, especially if they are not domiciled in the UK. Of course, however, clients ask me, so how does anyone know that I already have residential property abroad? And then I have to tell them, well, you must disclose it. And you almost see this light bulb lighting up above their head. But once we know that they have a foreign property abroad, we cannot, of course, ignore this fact. Notably, stamp duty land tax rate for the purchase of investments, commercial properties, ranges between 0 and 5%. And because of this fact alone, one may choose to invest in commercial property as opposed to residential. Jonathan mentioned that if you purchase 6 residential properties or more, you can apply the lower commercial properties rate, which effectively means that you will not pay between 3 and 15%, but you will pay, well, 5% at the most. Now, moving on to the taxes that one must consider while they own the property. Really, council tax is something that everyone in the UK has to pay, and it's typically fairly insignificant. But if you're owning the property and you are renting it out, you should consider your personal income tax rate. I will be considering this later when I will be talking about individual landlords, but broadly, UK income tax rates range between 20, 40, and 45%, depending on the amount of income that you receive from UK real estate. Next thing that you have to consider are taxes on disposal of the property. And what often comes as a surprise to individuals owning such property in the UK is that not only should you pay tax when you sell it, but also when you gift such property. And the consequences of gifting the property are the same as if you had sold the property at its current market value. And especially if the gift is between connected persons, such as between family members or between other close persons, the revenue will expect you to perform a valuation of the property to demonstrate that you have calculated your taxes on the basis of such market value. The capital gains tax rate for residential properties is 28%, and for the non-residential properties, it is 20%. So again, non-residential property kind of wins in terms of tax planning. The only way that you can avoid paying capital gains tax on disposal of a residential property is if you have lived in the property and if it has been your principal private residence. The relief is quite complicated, and I do not have time to consider it in detail. But suffice it to say that from 6th of April 2020, I mean from yesterday, before it was possible to move out of the property for it to stop being a home and for you to sell it within 18 months without tax. Now 18 months has been cut down to 9 months, which essentially gives you less time to plan your move and your disposal of the property. Also, what is significant is that now, when you sell UK property, you only have 30 days, 30, to report the disposal to the revenue and to pay taxes on account. This is significantly different to how it used to be before, when you would have to file your return and pay tax at the end of the tax year. Now moving on to inheritance tax. Essentially, inheritance tax is something that every person with UK real estate should consider, and I will touch upon it in the end. But broadly, if anyone dies owning property in the UK, then they have to pay up to 40% tax on its value. Now, if we are talking about owning and dying while owning UK residential property, there's not much that can be done in this respect. Whereas if the person is domiciled outside of the UK and they own non-residential property, there are certain avenues of fixing it. Now, if we move on to the following slide, where we will consider corporate ownership of UK real estate. Again, any company purchasing UK property must pay stamp duty land tax, except that if a company purchases residential property, it has to pay 15% in most cases without the possibility of using any lower rate.
Is now joining.
Also, one market advantage of using a company is that if you buy company shares, you do not have to pay any stamp duty land tax. And this often comes as a surprise, but this is it. You can avoid paying SDLT if you buy company shares. The only drawback, of course, is that when you're buying an existing company with property in it, potentially you're buying all the liabilities and all the undisclosed risks that such company may carry. And this often requires extensive due diligence. When a company owns UK property, the only tax really that we have to consider in terms of residential property is the so-called annual tax on enveloped dwellings. Simply said, if an individual decides to own UK residential property through a company, they have to pay every year anything between £3,700 and £236,000 just because the company owns such residential property. Of course, there are reliefs, and I will be considering them later. If a company is renting out UK property, there's a flat rate of corporation tax of 19%. The same tax the company must pay if it sells UK property, 19% on disposal. Now, one market advantage of using corporate wrappers to hold non-residential property is the possibility to avoid inheritance tax. Whereas if a company owns UK residential property, such as an apartment, no such freedom from IHT liability is possible. Now, if we move to my next slide, I've tried to prepare a small matrix of different tax considerations when a person is choosing which property to buy and which vehicle to use. First, if we compare residential and commercial properties, strictly from the tax point of view, commercial property is much better value. A, because you pay lower stamp duty land tax, and B, because a commercial property allows you to avoid inheritance tax on death of the ultimate owner of the structure. Equally, if we consider and compare personal ownership and corporate ownership of such real estate, typically it is possible to avoid stamp duty land tax on the acquisition of the company's shares as opposed to the purchase of the property directly. Normally, companies pay lower tax on disposal of UK real estate, and equally it is possible to avoid inheritance tax when a company owns UK real estate. So if you ask me strictly from the point of view of taxation, it is often much more beneficial to purchase commercial real estate in the UK in the name of the company. But of course, there are different circumstances and some purchases may be done differently. If we move to the next slide now, please, I would like to consider in a bit more detail various tax considerations that an individual landlord should think about. We have already covered stamp duty land tax, and this is a tax which cannot be avoided. There are certain avoidance offerings on the market, such as using special pension schemes, etc. But practice shows that they are not long-lived and the revenue does not like them. So it is just something that it's a capital outgoing, which we have to make right in the beginning. But this is, of course, a disadvantage because the only time that we can recover this SDLT cost is when we're selling the property in the future. On the slide, I have included a link to the stamp duty land tax calculator, which you can access at HMRC's website. which gives a good indication of the rate of tax that you will pay. The only thing that I would like to mention is the multiple dwellings relief, which Jonathan briefly touched upon. Basically, if you purchase 6 properties or more, you have a choice. You can either apply the non-residential SDLT rate, which is as low as 5%, or you can use the average value of the property to calculate the applicable rate of tax. Now, if a person is renting out UK real estate, what taxes should they be paying? Well, it is obviously income tax. And there's a marked difference between the way of calculating the amount of revenue subject to tax for UK residents and non-UK resident persons. If the attendees to this webinar are based outside of the UK, they only have to consider tax on the amount of their rental income that they receive from the UK, and they do not, of course, have to consider other income that they may earn abroad. Whereas if the person is living in the UK and is tax resident here, they have to take all their income into account to calculate their applicable tax rate. It could be their salary, could be their investment income, and of course, their rental income. And the rates are 20, 40, and 45%. I'm sorry, I don't know where the 30% came from on this slide, actually. Any income which is above £150,000 a year will be taxed at 45%. There are a few limited ways to reduce your taxable revenue. First of all, of course, there are current running expenses, such as for cleaning, council tax, small repairs, costs for the real estate advisor, etc. But really, you cannot deduct any capital expenditures, such as, for example, the cost of renovation or installing a kitchen in your apartment. Before, it used to be possible to reduce your taxable income by your mortgage expense. It is no longer possible. In fact, what the government has offered is the so-called 20% tax credit, which in principle allows you to reduce your income subject to tax, but in reality is only available to lower rate taxpayers. And for high rate taxpayers, unfortunately, does not really make much difference. Now, when such individual landlord disposes of their UK property, they have to consider capital gains tax at the rate of
+4479733124436
residential.
Is now exiting.
As I mentioned earlier, they've cut down the rate. They've cut down the time within which they must file a return with revenue, and equally they've made the application of the principal private residence relief much more difficult. Just one market difference between the UK resident landlords and non-UK residents is that non-UK residents can register for the so-called non-resident landlord scheme, which allows them to receive rental income from the UK gross, and of course to report it in their annual self-assessment at the end of the year. If we move on to the next slide, where I'm considering taxation of corporate landlords. Again, we have to begin with the stamp duty land tax.
Unknown participant is now joining.
And here, just like individual purchasers, the top rate is 15% for SDLT for residential properties, except that when a company is purchasing residential real estate, the 15% SDLT pretty much applies to most properties whose value exceeds £500,000, which I would imagine would cover most investment properties. And again, if you are offered to buy a company which already owns UK property, you can save on SDLT, although of course you will be buying certain undisclosed liabilities for which you would have to request reps and warranties from the seller. Both UK companies and non-UK companies now pay corporation tax at the rate of 19%. on their rental income. However, compared to individual landlords, they have a much greater leeway in using their interest expense to reduce their taxable rental income. Strictly speaking, there is a limitation of how much interest they can deduct from their rental income. What I mean is that the maximum amount of deductible interest is 2 million per year. But I would imagine that for many companies, this would not be a problem, as 2 million, I think, is quite a significant amount. The only thing that, of course, they have to consider is the annual tax on enveloped dwellings, which such company must pay. However, there is a relief. If the property is being rented out commercially to a third party, no ATED liability will arise. The only thing that I have to mention is that the company cannot rent out the property it owns to its own shareholder or to its own director, because in this case, it will still have to incur the ATED liability. I mentioned earlier that I prefer owning UK rental real estate through companies, and there are several reasons for it. First of all, it provides what I call the inheritance tax shield in respect of non-residential properties. Second, if a company owns UK property and rents it out, the amount of tax per year is limited to 19% corporation tax, which is significantly lower than the top rate of 45% for your personal income tax. So as long as the company which owns such property does not pay salary or dividends to its UK resident shareholder, there will be a significant tax deferral. Moreover, if the UK company belongs to a non-UK resident individual, the total rate of tax will be limited to 19%. For the simple reason that when the UK company pays dividends abroad, there is no withholding tax. So there is just UK corporation tax to consider. Of course, the owner of such UK company would have to consider their own personal taxation in the country where they are resident. Now, I would like to move to my final slide because I now know that I'm running out of time. I would just like to consider various inheritance tax implications. It comes as a surprise to many that no matter where you live and what your nationality is or what domicile status is, if you die, then any UK real estate that you own at the time of your death may be subject to tax at 40%. And there's not much that you can do about it unless you follow my recommendations. What can be done to reduce such significant rate of tax? To begin with, it is often tax beneficial to be married, because if a spouse dies, then their spouse receives their inheritance without any tax whatsoever. Also, it might be advised to you take out a mortgage to purchase UK property, because a mortgage creates a liability which reduces the net value of UK real estate liable to inheritance tax. Then, of course, it's possible to gift such property before you die so that it goes out of your estate. But there's a rule under which you must survive for 7 years after moving such estate, after gifting such real estate to your children or to any other third party. So really, when I'm asked what is the best strategy from the point of view of inheritance tax planning, I often say avoid residential property, because it's the one asset that will always be subject to tax if the person dies. However, if one is willing to invest in commercial property, say in a shop or in student apartments, it is often recommended to use a foreign company, such as, for example, registered in Jersey, which could be made resident in the UK and which would provide the full shield against UK inheritance taxation. Of course, at all times, one must make sure that there's a will in place, and alternatively, one can take out inheritance tax insurance. I think I am over with my presentation on UK taxation. Thank you. Asel?
Dmitry, thank you very much. It's really nice to know about the taxation, and we already have some questions regarding your slides, which we will announce after Mark's presentation. So our next panelist is Mark from Benham Reeves, who is the director of Benham Reeves and been in the company since 1995. So I would say he's the most experienced when it comes to property market in London. I would like to also point that Mark's surname, Grunde, means landlord or lord of the manor from German language. Although I don't know where Mark's ancestors come from, but he's the true lord of the manor in Benham Reeves.
Thank you very much, Asel, and hello everybody. I'm Mark von Grunde. I'm going to try and keep this brief because I know we're running over time, but I have got a few things to get through. I'm a director of Benham Reeves. I've been in the business, as Asel says, for over 25 years now. And today I'm going to briefly talk about who Benham Reeves are, if you don't know us, and what we do. Then I'm going to talk about the rental guarantee we're offering to Barratt investors, and finish with an update on the market and the impact of COVID-19. So, on to my first page, Benham Reeves. Well, we've been going for over 60 years in London. In fact, we started back in 1958. So actually, we're a year older than Barratt, which is quite interesting because Asel told me they were established in 1959. So we've been around similar lengths of time, only in the London market. And then today we have 16 branches throughout the capital. And internationally, we have offices in Hong Kong, which we established actually in 1995, Singapore, KL, Shanghai, India. We have 3 offices in India, in Delhi, Mumbai and Bangalore, and recently in Dubai, covering Kenya and Africa. Our international offices are there to support clients through the journey and to give them advice on investment and then hold their hands throughout the whole process. 65% of the properties we let today are fully managed through us, and today we manage close to 3,000 properties. And on to my next page. So a complete end-to-end solution. We offer a full one-stop service, starting with investment advice. So we can advise the client on what the rental they're going to get and whether the rent they've been told if they're buying it for investment is the correct amount. We can then help them with the handover and the snagging. If clients are based around the world, we're here and we can go and check the properties completed. Barratt do a fantastic job, some developers not so. So we're there to actually make sure it's perfect for the client. Then we can help with the furnishing or refurbishment. So if it's a brand new property, we can help with furnishing through Install Direct, which is our sister company I'm going to talk about in a minute, or with refurbishment. If it's a second-hand property, we can help with refurbishment. Then we help with property management, so that's arranging all the legal requirements are done, like smoke detectors, EPCs, gas safeties. There's so much legislation around property today in the UK that we're there to protect clients and make sure they can comply with the regulations. And then we let the property, that's including referencing the tenant, credit referencing them, collecting the rent, holding the deposit, making sure, inspecting the property, and making sure that the tenant looks after the property when they're in there. And then finally, we do annual tax returns for clients with overseas, who are based overseas with UK assets. And it's important to mention here that everything I've just mentioned that we do in-house to ensure and control the quality of our service. And on to the next page, In-Style Furnishings, which I briefly mentioned, is to do with furnishings. Established in 2004, that's 16 years ago, In-Style Direct is now one of London's leading furnishing and interior design companies. We offer a complete one-stop hassle-free service for homeowners and investors. And in a fiercely competitive market, In-Style provides a real advantage to landlords in attracting and retaining great tenants with minimal voids. And on to my second furnishing slide, I've actually included a couple of examples here showing the in-style effect, as I like to call it, with before and after pictures, just to give a flavour as to what we can do to transform any home. And that's all within very tight budgets. And so much so that 85% of the properties that in-style furnish are let within 7 days. It just shows how tenants love the way they're fitted out. All of our stylish furniture is held in our warehouses in the UK, just outside London in fact, so everything is usually available for delivery within 48 hours, and all the window dressings are made in our own factory. We also offer a full bespoke interior design service for clients who want that extra special finish, or that extra special wallpaper, or homeowners who want something different. Plus, as I mentioned, refurbishment that Benham & Reeves offer, we offer a full refurbishment service under Install Direct. Basically everything that's required in the home, whether that's decorating, new carpets, a new kitchen or new bathroom, anything that's needed. And again, everything that Install does is done in-house. Nothing is subcontracted. That prevents us from getting let down by suppliers. So we then, in turn, never have to let our clients down, especially if they've got a tenant moving in the next day. We do not want the client to be let down. Everything we focus is on the client first. And on to the next page, Barratt's most exciting new innovation with Benham & Reeves is the rental guarantee package. Well, as I said, we're working with Barratt London now to offer investors a unique rental guarantee. We're offering a 5% rental yield for 2 years. Rent is paid from the day of completion, regardless of the rent we actually achieve, or even if it's not let. And the process is very simple too. The client reserves, they sign an agreement with us to understand what they're getting. It sets out all the terms. Barratt even throw in for free a fantastic interior designed complete furniture pack from Install Direct. And then on completion, we simply start paying the client the rent. We pay it directly into their bank account. And so they have no worries whatsoever. This, for me, is the perfect solution for everybody. For the investor and the landlord, they avoid void periods and they earn rental income straight away. And it's great stock for our lettings team because we've got it to let. And it's a great tool to help agents or introducers to actually sell the product. And now on to the next page. London's still the world's capital city. Well, London continues to be called the world's capital city for a number of reasons. First, obviously business. There's been significant post-Brexit investment by international giants like Bloomberg, McKinsey, Wells Fargo, Citigroup, and Norway's sovereign fund, which incidentally is the world's largest sovereign fund, has made several investments recently. And noting Citigroup, they've just recently agreed to buy their tower in Canary Wharf, which they've rented for the last few years since it was built, but they've actually finally committed to buy it. The second is finance. London has the highest concentration of financial and professional services service firms of anywhere in the world. And there are now more people working in fintech, financial technology in London, can you believe it, than Silicon Valley or New York. And third, technology. Well, London has now one of the most strongly growing tech sectors in the world. And if you look at who's come in recently, you've got Google, Facebook, Amazon, Apple, Snapchat, all announced new headquarters in London. UK tech investment reached a record £10.5 billion in 2019. The fourth reason why London's so good is because of education. London is the leading academic hub. It's consistently ranked as the world's top student city. There are amazingly 450,000 overseas students studying in the UK today, and they together contribute £20 billion to the UK economy. And one of my favourite facts is that 58 of the world's leaders were actually educated in the UK. So it shows all that affinity between education and investment coming into London. And the fifth reason is the rental market, and this is my real speciality. 1/3, so 1 out of 3 London households live today in private rented accommodation. And that's only going to go one way, and that's up. And the reason for that is that high prices have left many Londoners unable to buy, even with Help to Buy coming in now. So the demand for rental accommodation is very resilient and is going to stay very strong. And the sixth and final reason is the UK. If you look at the economy in the UK, it has the world's 6th largest economy now. And London's economic growth is double the rest of the UK. So those are my 6 reasons, and all really compelling reasons why London is still the world's capital city. And now on to the next page, the impact of COVID-19. So now turning to look at what the impacts have been. A month before the pandemic hit, London house prices rose at their highest rate since before the Brexit vote. The market had repriced and a recovery was underway. We do now expect volatility in the market due to the effects of the coronavirus pandemic, but as mentioned earlier, the fundamentals of the London market remain so strong. Borrowing is super cheap now. It's even cheaper now since the Bank of England reduced the base rate to 0.1%, which beats all previous historic lows. Returns on cash are virtually zero, even negative considering inflation. Property is the perfect income diversifier for investors, especially with the 5% rental guarantee Barratt's are now offering through us. And overseas investors can benefit even more than UK investors from the sterling discount of over 30%. And for people with Hong Kong dollars, the pound is 40% lower than 5 years ago. Property is also much less volatile than stocks and bonds, especially important taking into account what's happened to equity markets during COVID-19. There's going to be significant price inflation when the pandemic is put under control due to all that pent-up demand in anticipation of the proposed 2% stamp duty surcharge on overseas investors in April 21 that Dmitry and Jonathan mentioned. The UK government's unprecedented intervention have been designed to support the economy, businesses and employment, and we feel this will help see us through this period. UK property is known for its wealth preservation, and this pandemic is only a temporary blip. And let me now round up predictions for London over the next 5 years. Well, for sales, forecasts are 13 to 18% growth in London sales prices over the next 5 years. And in fact, Savills are predicting 12.4% for prime central London, and a few other large predictors are predicting lower than that, which all points to the fact that investors should be looking to outer zones 2 to 5 for higher capital growth. On the lettings front, forecasts are average about 15% growth in rents in London over the next 5 years. And finally, on the tenants front, PwC forecasts that by 2025, in 5 years' time, 60% of Londoners will be renting. So on the right, you'll see one of my favourite quotes from Warren Buffett: "Be fearful while others are greedy, and be greedy when others are fearful." So if you believe in the world's best investor, now has to be the time to invest. So thank you for listening, and now on to my final page. So here are my contact details, should you have any questions. But just before I go, I wanted to briefly mention that I work closely with introducers and agents around the world, and I'm always happy to pay very generous introductory commissions if needed, and anyone that's ever worked with me knows that I'm not interested in stealing anyone's clients. We are very strict in ensuring we always refer clients back to the introducer if they want to sell or buy. So fine, if you do have any investors, clients or landlords who are nervous at this time, then I'm more than happy to help them, either on the phone or by email. My details are here, just to give advice. Thank you very much. Back to you, Asel. I'm finished.
Thank you very much, Mark. That's fantastic overview of the market, and thank you to all of our panelists for really great and informative sessions this morning. I hope you'll all agree. We've got lots of questions, but it has certainly been a great insight into each of the specializations of the panelists today. We will, after the webinar is finished, circulate contact details for everybody, and also a recording of the webinar in case anybody has missed anything or would like to recap or send round to their wider team. So we do have lots of questions, so I'll just crack on straight away if it's okay with everybody. The first question is from Natalia, and this will be to Jonathan. If the buyer will exchange this year but will complete after the 1st of April 2021, will they have to pay the extra 2% stamp duty?
The short answer is almost certainly yes. The government hasn't clarified the position yet, but when they brought in the 3% change, anyone who exchanged after the announcement was liable. So if you're looking to avoid that 2% and you haven't exchanged yet, I would suggest you do need to be looking at properties that are going to complete before April 2021.
This is great. Thank you, Jonathan. Next question, are all overseas buyers counted as second property owners by default? Again, for you, Jonathan.
Well, the government hasn't put any detail onto, sorry, the second homeowners was the question, Stuart?
Yeah, are all the overseas buyers, counted as second property owners by default?
No, they're not. It's a question of fact as to whether an overseas buyer already owns another residential property. Obviously, the government may be surprised and may make inquiries if an overseas buyer is making his very first purchase ever in the UK without owning any other property, but it's not unheard of. A lot of clients do rent overseas and don't actually own their own properties. So it's a question of fact, and it's a self-declaring stamp duty form as to whether the client does own any other residential property in the world.
Perfect, thank you. Next question from Anna at AZ Real Estate. Is only one proof of address required for AML checks?
Yes, it is. Essentially, lawyers have to adopt a risk-based approach to be satisfied that they are dealing with the client and not a fraudster. To do that, the minimum requirement is photo ID and a proof of address, two separate documents. A second address document isn't necessary, but it may be requested in some circumstances if we need to obtain a bigger picture.
And just to be clear, Jonathan, so that's for each person who's named on the contract as well. So if there's more than one person, then you need to provide for both.
Correct. We need ID for everyone, but of course they may have a joint bank account with their address printed on that joint bank account. So that bank account statement would suffice for both parties if both their names are on the statement.
Wonderful. Thank you very much, Jonathan. So moving on to Beya, is the mortgage available for international buyers? I think we did cover that, but if you can just recap, Beya.
Yeah, well, my main clients are overseas clients who live abroad and buying property or either second home or like first purchase. Some of them even they don't have, as you said, they don't have even property in their country, and the first time they're buying here. So either for holiday home or for just putting their savings somewhere else as a security. So we're still doing it. We're still seeing a lot of clients. Even in this period, it should be quiet, but I can see as well some clients still want to finance, and it's from abroad. So yes, we can do it, and we can depend from which country. It would be depend the LTV and other factor as well.
Got it. Thank you. And on the same subject, Beya, has COVID-19 affected LTVs, and what has the impact been on mortgages?
Well, yes. Well, for local clients who live here in UK, yes, there is some restriction. So the 90% LTV is gone. Before I used to get 90-95% LTV for local clients. even foreign national local client here. But for a foreign national, some lender, they, with all my respect, they just watching what's happening, so they don't want to lend. But some of them, they're taking the opportunity of this situation what we're having, and they trying to send some attractive deal, maybe with a slightly higher rate, so you can find up to 80%, but the rate will be a bit higher because they know to give this, they know to take this risk. But now they kind of reduced the example to 65, 75. So I'm doing a transaction now for a client who wants to have the exchange. He put 20% for off plan 2 years ago, and now he's completing the next few months. So he doesn't want to put any extra cash from his pocket. So I'm getting him 75% LTV. So this is what we can get for the client at the moment. Maybe when the situation will get much better, we'll come back with the 80%. But for foreign national clients who live abroad or expats, we can get them up to, if the situation is come back to normal, up to 80. But at the moment, it's maximum 75%.
That's great. Thank you, Beya. And thanks to Awais from Elysian for the question. Next question from Natalia. We know the banks struggle currently with new applications due to the issues with valuations and attending valuation particularly. Not many banks have the system of relying on the desktop valuations, and we've been told that the majority of banks reduced the LTV to 60%. Can you please comment on that, please?
Yeah, well, as I said, yeah, some lenders, they go in for 65, not 60%. So the local ones, the maximum now LTV for local transaction is 75%. For foreign national, it's between 65, 75. With all my respect, it depends case by case. Which client is, his background, his income. It's worth it to give him this fund. Really, he's like able to pay it, because the problem is now, you know, with this waiver, 3-month waiver for the loan, a lot of people, they coming and saying, oh, we cannot pay, you know, the mortgage, or our tenant is not paying, so I cannot afford to pay. And this is what makes the chaos for the lender, and this is why they start to be worried. Oh well, I'm giving this and they cannot afford it, I would be in trouble. So this is why they consider it now. Yeah, some banks still they giving, but as I said, it's case by case. It's the client's worth to give this fund or not.
Perfect, thank you, Beya. And finally, can you tell Sushant, who's sent over this question, how to leverage a property at a low debt exposure rate?
At a low debt. So if he wants a low debt, so he needs to, it depends which property. Example, I'm doing a case now for 2.3 million. The case, the client has 40% only mortgage, much less than 40. I think it's around 25, something like that. So I'm getting just the deposit from it, from this property, and the rest will be mortgage. So the property will have, example, 50% just LTV. Still, it's the rent will cover the mortgage, and the client will not pay anything from their pocket, as a payment, monthly payment. And they can buy with a 25% a small flat or new build flat, who they can rent it, and still will cover the rent. The rent will cover the mortgage, and they don't need to put this. And after maybe many 10 years or whatever, 20 years, either they leverage again, or they can sell it and pay the finance, pay off the finance and get the equity, either put it for another investment or just keep it in their bank account.
Okay. Super. I guess just from our perspective, across the UK, we've had certainly over the last couple of weeks, we've had a lot of issues with lenders sending out valuations. But I think suffice to say, over the last few weeks, it's been very, very disrupted, and people are getting used to this new way of working. And certainly in the last week, we've seen greater improvement in communications, both from mortgage brokers and from the lenders. And likewise from the Help to Buy teams as well. So the various processes are getting back to normal as much as.
So for the valuation, sorry, Stuart, I want to say that. So a lot of lenders, they're considering now to do desktop valuation. Okay, I have a few lenders, they still have, to be honest, the small group of survey who still going and doing the surveying. So it's risky, but what they're doing now, they have this flexibility that, okay, they can approve the mortgage, they can give you the offer, and because, you know, the completion takes some time, the solicitor need to work on the paperwork, they need to verify the term and condition of the bank, the other requirements, and for overseas will take some time. So what they're doing, they're leaving the valuation the last thing before completion. So like that, the process of the transaction doesn't stop because of the valuation.
Yeah. Very good. Okay, thank you, Beya. Heading over to Dmitry now. We've got a question about inheritance tax. Does IHT apply only on the actual net price of the property or value of the property, or on the capital gain made on the property?
All right. When a person dies, the executor of the estate must obtain market valuation of the estate, which means that essentially it is the property's market value at the time of the death as reduced by any liabilities such as mortgage, for example. So we are not really concerned with any increase in value over the time, but we're just looking at the current market value as decreased by, say, mortgage.
Perfect. Thank you, Dmitry. And then a related question. If there is a will in place, does that circumvent 40% of inheritance tax for residential property?
The short answer is that it does not, but it allows for the following planning strategy. You see, if a person dies without a will, they die intestate, which means that their spouse gets a share of their UK estate, but also do their children, grandchildren, etc. Now, in the absence of a will, any property which passes down the line to children, parents, or grandchildren will be subject to tax at up to 40%, whereas the will can fully displace the intestate rules. And if a person chooses the will to pass all of his estate to his spouse, then the spousal exemption will apply. So to answer your question, the will does not remove tax, yet it allows you to transfer the property in such a way upon your death, which will create no IHT liability.
Good to know. Thank you, Dmitry. And then we've got the next question. Does the net value of a property mean the actual property minus the outstanding mortgage? I think you've clarified that, but just to be sure.
Well, the short answer is yes, it is the property value less the mortgage. But it is important to remember that you cannot just take out any loan secured over the property. It used to be possible before, but now only the genuine loan, which is repayable on death, which is secured by the property used to acquire the property at the outset, will be deductible.
Perfect. Thank you very much, Dmitry. We're heading back over to Jonathan now. A question for Jonathan. Can you explain more regarding stamp duty reduction upon purchase of 6 properties? And this may require an individual consultation, but if you can just give us a brief overview.
Yes, well, essentially, the government treats a purchase of 6 properties as a commercial transaction, and therefore subject to the commercial property stamp duty rates, which amount to a maximum rate of 5%. The important qualifying criteria is that the 6 purchases must be treated as a single transaction. You can't choose to buy one property today, another property next week. It's got to be one transaction with one overarching agreement to make those transactions interdependent. If those criteria are met, if it can be said to be one single transaction to purchase 6 properties, then the buyer can choose to apply the commercial stamp duty rates. Perfect.
Thank you, Jonathan. And next question from an anonymous person. Is the stamp duty increase subject to change or review considering the current market circumstances? It's wishful thinking, but do you have any steer on that?
No indications at present. The Conservative government prior to the election in December made it quite clear that they were intending to bring in stamp duty for overseas buyers, we were fearful that it would be a higher rate of 3%, but they've announced a 2% rate. I don't see any change in that. Very
good. And how would stamp duty increase affect the market? I know that Mark touched on this, but I certainly will. I mean, as a group, we're anticipating that there will be increased demand in the short term, people trying to purchase the properties and exchanging the properties before the changes come into effect. But Jonathan, do you have any predictions on that at all?
I'm not sure the 2% increase will make too much difference. It's not a large amount in the scheme of things, certainly not the dramatic change we saw under George Osborne, where he brought in the 15% levy for company acquisitions. When we saw the changes by Osborne come in, we did see a softening of the market and a gradual change to take into account the extra expense that the purchasers were outlaying in the acquisition, which did see a fall in prices. At the end of the day, I think it will come down to supply and demand and the strength of the UK property market as to whether we see any softening in prices because of the 2% imposition.
Good insight. Thanks, Jonathan. Next question, is stamp duty paid on exchange or completion?
It is only paid on completion, and it has to be paid within 14 days of completion. But the solicitor is under a legal duty to the lender to be holding the stamp duty funds at completion. So when we present our completion statement to the clients for them to send the final payment to complete, we do include the stamp duty figure in that, and they send it to us with the balance of funds to complete.
That's great. Thank you very much. So next question to Beya. How long does it take to get a mortgage offer in principle? Beya, are you there? Or we perhaps will come back.
Hello, can you hear me?
Hi, Beya. Yeah, we can now.
Yes, hi. I'm here. I've just put in mute because I don't want to have any. Yeah. So, mortgage in principle, decision in principle, you mean?
Correct. Yeah.
Yeah, decision in principle. It depends on the lender. So if they have a system, so it takes just within an hour. But if they don't have and everything is manual, they need to submit a proposal. This proposal will go by either email or whatever, face to face, and then they send. Depends how much they busy. So say from one day to 4 days, 5 days max.
Perfect. And can you just outline the minimum documents required for a client to get an offer?
So decision in principle is the documents we need. It's the ID, fact find form to be completed, and proof of address, and just a letter employment. Then before, of course, we submit any application later on, I need to see a proof of deposit, and the bank statement shows their income and all other stuff.
Perfect, thank you. And a good question here. So when buying off plan, do you have to get a mortgage AIP now if the property is completing a year from now?
So I have a lot of clients where they did because they weren't comfortable to do the exchange without having a decision principle. So they want me to get them just a decision principle from a bank. It doesn't need to be the same bank who you're completing after 2 years' time, because we might find much better rate in 2 years' time. You know, the market change. So it just either an email confirming, okay, this bank is happy to give you this and this and this with indication, or it should be a proper. If they have a proper system, then they send us a proper letter and saying. But it's a very useful tool for clients, and I've done it many times with a client who buying property and is completing in 1 year or 2 years' time, and some of them 9 months before completion. So it depends. But because the application, when we submit the application, the process of it will take at least 3 months, and then this is if very slow. But if it's very quick and everything, maybe the average is from 2 to 6 weeks. And then you have the offer valid from 3 to 6 months. We can extend it to maybe another 3 months, but after that, they will ask for updated document, which the client hates to provide and ask for it, but it's good at least we approved. So the minimum to have, if you want to submit proper application and everything, it should be at least, say, 8-7 months to start the process, because by taking only to get the document from the client will take you some time, and by the time you get the document, then you can submit the application, start the process. If there is any requirement, it takes some time. So I always ask if they're having anything off plan, we start. If they want the mortgage offer, then it should be at least 7-8 months in advance.
Thank you, Beya. So I guess, I mean, from our perspective, and I dare say most developers' perspective, when we're managing several thousand completions, we do require all of our clients, before they purchase a property or make an offer on a property, we do require them to show either proof of funds or a decision in principle from a lender, so that we're confident that the client is proceedable and there's no completion risk there at all. Okay, next question. If we go on to Dmitry, if my kids' names have been added to the property, do they still pay inheritance tax? Good question.
Okay, we have to consider, first of all, the mode of owning the property, whether it's tenants in common or joint tenants, etc., because this defines how the property passes down the line on death of the owner. Broadly, if they are joint tenants, they own the whole estate together, and if one parent dies, then or both parents die, the children inherit it, and then inheritance tax may ensue. Whereas if each owner has their own defined shares in the property, then strictly speaking, the parents can transfer shares between themselves and then decide what to do with them. I guess what I'm trying to say is that the best strategy is always, as much as possible, to buy the property in the name of the children from the outset, leaving as little value of the property in the name of the parents as possible. However, realistically, this may not be possible, and I guess what I'm trying to say is that it does not always present perfect planning opportunities, but it may help if you put the property in the children's name from the outset.
Thank you, Dmitry. And follow-on question. So for a non-resident, would buying a London residential property through private company structure be more tax efficient than buying in an individual's name?
Right. Do you know if the person who asked the question meant the property to live in or to rent it out?
I guess as they're saying non-resident, I would expect it to be a rental property. Okay.
If we're talking about a rental property, then depending on the rental yield, it may be, well, the amount of rental income will determine whether it is more tax efficient to hold it through a company or individually. I'll give you an example. If a person living abroad who is non-UK tax resident is receiving UK rental income, say the amount of this rental income is under, say, £30,000, the effective rate of tax will be, I would say, around 15%, because they may benefit from the income tax allowance, they may, and they will only pay a very low rate of income tax. Whereas if the amount of rental income comes to, say, £100,000, it's much more beneficial to own it through a company, because the company will only pay 19% corporation tax, and then it will pay no further tax on paying out dividends abroad. However, one important factor to consider is the stamp duty land tax, because if an individual is buying a property in the UK, which is not that expensive, then the SDLT will be significantly lower than if it was the company buying it. Because to remind you, if a company is buying UK residential property above £500,000, the SDLT rate is 15%. So the short answer is that the tax efficiency of holding it directly or through a company will depend on the amount of rent and also on the value of the property, as this will determine the amount of SDLT payable. However, just one more point to make. If we're talking about inheritance tax planning, then the corporate shield will not give us any benefits because it's tax transparent for the purposes of inheritance tax. But if such non-UK resident wants to buy commercial property, then it makes sense to use a foreign registered company to buy such UK commercial property, as this will offer full protection against inheritance tax.
Very good, thank you, Dmitry. Great answer. We have somebody who has sent over their personal tax situations with total earnings, etc., but we'll take that offline and send it across to you to avoid disclosing anybody's personal information on the call. The next question to Mark from Belarus. Is it possible to know which entity guarantees the rent under the 5% rental guarantee scheme?
Is it possible what, sorry?
Is it possible to know which entity guarantees the rent under the 5% rental guarantee scheme?
Oh, okay, yeah, absolutely. So that's Benham & Reeves who guarantee it. So you buy the property from Barratt. Barratt then give you a contract which you sign directly with us, and we guarantee the rent to you. So it's us who guarantee it to you.
Thank you, Mark. And next question on the market performance. By how much are you expecting the London property prices to drop further? And are the prices lower than they had fallen due to the Brexit uncertainty as well?
So that's a really good question. My view at the moment is the market, you know, everybody knows London is in lockdown at the moment. Fortunately, we're still open for business, but all our branches are closed. And the reality is there are very, very, very few transactions happening. There are rentals happening at the moment. We're doing rentals to the NHS, but we're also doing rentals to people that are here that need to move. And we are letting properties on a daily basis, whether that's by video or virtual tours or whatever. In terms of sales, I think sales have practically come to a full stop for most people at the moment because people are waiting to see it out of the way. Most people, unless they buy off plan, if you're buying something in the future, then you can buy it without seeing it. If it's a second-hand property, people generally, well, most people will insist on seeing it. And if they insist on seeing it, that has been really put on hold. Videos are very good for rentals because people aren't going to be living there forever. It's not their home forever. It's only for a short period of time. So therefore, they're more likely and more willing to make offers. But I think in terms of their home, I don't think they are. And what that therefore means, looking, going round to where the question started in capital prices, I don't think the market's moved at all at the moment. We've not seen sufficient dips. So my view is yes, of course, there are going to be some vendors or sellers out there who are very keen to sell, and you will get a deal on that. Most of the clients we have who are in the market who wanted to sell are saying, I'm not selling if I'm going to get a ridiculous price. Just wait. Because this pandemic is a cycle, and I'm not saying we've had it before, but it will end, whether that's 3 months or 6 months down the line. And property is not a short-term in-and-out solution. It is a longer-term hold. And so if you're looking to buy, do not expect people to be offering big, massive discounts because they aren't there. And I equally think, as I said in my talk, there's going to be a lot of pent-up demand. House prices started to move before the pandemic started, and they had moved up the last quarter. And I think that pent-up demand of people who are holding off buying will actually push a slight blip in prices upwards. So you're obviously always going to be able to negotiate a deal with some people, but I don't foresee great big drops. The market had been really starting to recover and was starting to look very, very, very good, and prices had moved up, and now it's on hold. And I would more urge people to look at the market on hold. Anybody that has clients thinking they're going to come in now and buy something for 50% or 30% off or anything like that, it's just not going to happen. London isn't that kind of market. What people don't appreciate, and I understand obviously a lot of people get finance, is we aren't overly leveraged in the London market. There isn't so much leverage, so people aren't, even if they do or don't have tenants, they're not desperate to sell. So going, the short answer to a very long answer that I gave is, I don't think there'll be much movement in prices. I don't think prices
clearly
will go up, but I don't think there'll be much.
Great, thank you, Mark. And just quickly, so from George, could you suggest your top area, if you're looking for a long-term investment in London, what area of London would you be looking at the moment, personally?
So it's interesting. I think, you know, everybody has their own ideas of where they like, but I personally really like when I buy. So I'm an investor myself. I have my own home, but I buy investments. And I bought a property this year already. I bought one at the beginning of the year. I always look for things that are interesting and things that are regenerating. I think regeneration schemes are the most interesting out there because it's all of the effort that goes into it. So you don't just, you know, if you buy...
Is now joining.
Barratt have a lot of interesting schemes in the surrounding areas, zone 3 to 5. And I think when you look at those, you know, you look at Hendon Waterside, which I think is a fantastic development, right on some beautiful lakes, and there's regeneration going on with the whole area around it. You look at Millbrook Park, where there's a huge regeneration going. You look at Hayes. These are areas I really like. Hayes I really like. In fact, I bought something earlier last year, which is not far from Hayes, because the Crossrail coming in there in 2021, fingers crossed, there's going to be capital growth. So in terms of picking a specific area, I hate picking a specific area because it's not saying others aren't good. I always just look for, personally, something that has regeneration potential within it, because you don't just benefit from the developer pushing prices and the developer giving you a brand new product. You benefit of the surrounding areas giving growth. So for me, I would buy in any of the schemes where there's regeneration coming.
Perfect, thank you, Mark. Very, very good answer. And next question to Beya. Do buyers need to have a target property to obtain an AIP or DIP?
Yeah, no. He can get, like, usually clients, I tell him just to pick about, like, firstly I discuss with the budget and how much he can get. Then he look in the market. Even if he doesn't like it, he just give me an address. I need just an address. Some lender, they accept it without an address, but some lender, they need an address to provide it. So whenever I have the address, I can change it later. Before I submit the application, I can just amend the DIP later on, and this will help them to get the property they need. Sometimes they give expiry date for the decision principle, so, and some of them they not, like, it depends which lender as well we're dealing with.
Great, thank you, Beya. So next question for Dmitry, an anonymous person, but they believe that there is a £350,000 allowance for IHT tax from each parent to each child. Is that correct or not quite correct?
Yes, what you are talking about is the so-called nil rate band. Essentially, this is a quote-unquote tax-free amount which every person has with respect to the inheritance tax liability. There are a few caveats, however, to consider. To begin with, yes, the premise is correct. If both parents own the real estate together with their children, and if they don't own any other property in the UK other than this real estate, then the value of their share of the property for the purposes of IHT calculation is together reduced by £650,000. This is correct. But of course, if they have other property in the UK, or say if they have securities, then of course this nil rate band will be depleted by such other property. Also, such nil rate band is depleted if they make any gifts during their lifetime and if they die within 7 years, because this eats into this nil rate band. However, on the slightly brighter side, it is in principle possible to extend the nil rate band from 325,000 to £500,000 per person. But of course, on the condition that this applies with respect to the prime principal private property in the UK, and also the total value of the estate in the UK is below £2 million. So in answer to your question, yes, both parents can reduce the value of their property share by £650,000 or even by 1 million, subject to them not having other property in the UK or their property value not exceeding £2 million.
Super. So, Dmitry, just to clarify, so that's per parent. So if it's a single parent, then it will just be their individual allowance on the nil zero band.
That's right. Only £325,000 per person.
Super.
And I just wanted to make one small observation that many people say, colloquially, I would say that somebody pays inheritance tax. Well, this somebody is not strictly speaking the person who inherits the property. Inheritance tax is payable from the estate of the person who died. So strictly speaking, the executor of their estate must use the property in the estate to pay inheritance tax, following which all the heirs will inherit the property.
It's very clear. Thank you very much, Dmitry. That's great. Next question, could you just highlight or go into a bit more detail on the threshold that you mentioned for finance costs, tax deduction in corporate ownership?
Right. Okay. So for the corporate ownership, we are talking about corporate interest restriction. Basically, if a company has over £2 million of interest per year, then anything above this 2 million will not be subject to deduction. It cannot reduce its income liable to corporation tax. But if we're talking about £2 million of interest restriction, I cannot do the math quickly, but I presume we're talking a significant amount of loan that such company would have taken out if 2 million represent interest on such loan. So really, we're talking about large groups which invest in UK real estate. And I would imagine that for most intents and purposes, an individual using an offshore entity to invest in UK real estate would not reach such limit. I guess in summary, if anyone is interested in it, they should Google corporate interest restriction, and they will find plenty of information, or they can speak to me separately.
That's great. Thank you, Dmitry. Last final few questions. So, Mark, could you just highlight for us what is actually covered in the rental guarantee, and what is the actual market rent yield of the property compared to the rental guarantee that we'll be offering through the joint scheme, and what assets are actually guaranteeing payments if the market softens?
Okay, so in terms of what the guarantee offers, as I said, you sign the purchaser signs an agreement which is between us and them, and it guarantees that on completion we will pay the rent to the investor for the 2-year period. And what's included within that is the rental. Obviously, Barratt also include a full furnishing pack, so basically it's ready to go. And that will give you a 5% gross yield. In terms of what the actual rent will be, it may be a little bit lower because average rents in London at the moment are circa 4, just over 4 in some of the outer areas, can be 4.5. But you know, some of them are as much as 5. Some of the very small studios, we've seen yields. I mean, we've done one recently in Eastman Village, where we guaranteed a 5% yield, and the rent we ended, and that's again for 2 years, and the rent we actually achieved was equivalent of 4.9%. So actually, it was pretty close. And in 2 years' time, when things have moved on, we think rents are going to move up. As I said in my talk, I mean, most projections are 15% growth in the London area in rents over a 5-year period. So we don't need much increase to get up to 5%, and I don't think this is an inflated yield, so it's giving you 5% because the actual yield is going to be 2%. So your purchasers, the investor's going to get a terrible shock. I think this is just 5% because it's an easy figure, and yes, there probably will be a little bit of a hit to start with. It takes time to find a tenant. If you buy new, we always say you should allow yourself a month to cover the bills. So this scheme just enables you to get instant income if you have a loan, so you can pay your mortgage and you don't have to worry about it. What was the second goal? What's the entity guaranteeing it? The entity guaranteeing it is Benham & Reeves. We're a UK limited company. We've been going over 60 years, and we're strong enough. We're strong enough to support that. But you have got a Benham & Reeves guarantee. We do have professional indemnity insurance, as most good agents should have, in place. So if anything went wrong and we went bust, you would still get your money.
That's great, Mark. Thank you. And quite rightly so. We were very careful when we were choosing the agents that we were going to work with, and Benham & Reeves is a fantastic, not just the strength of the business and the length of time you've been trading, but also the breadth of London market knowledge and presence is spot on. So it's working really, really well. So just a couple of last questions. So Beya, does the principal mortgage approval have any charges associated with it?
Do you mean from the lender? Of course, we have charges for us as a mortgage broker. Our charges depend on the property. The property less than the mortgage is less than 400,000. Our flat fee is £2,000. Half of the fees would be paid at the beginning when we start the process, we receive the document and getting everything approved. The rest only when the mortgage offer is issued. So this is the basic charges we do, and it doesn't mean if he pay the fees for the decisions or whatever the fees, this means like he's paying half of it, and then when he's completing, I'm doing the rest of the job. But from the bank, there is no charges. They don't charge for anything. It's just me as for my work only.
Understood. And Rami from Chesterton's is just asking us, what is the best mortgage provider for Kuwaiti clients at the moment?
Well, we have a big panel, so it's not about best mortgage provider for Kuwaiti client. It's where your client fits, which criteria fit. So, if, for example, our client, his age is 80 years old, we need to find a lender who's happy to give this client a mortgage. If the client, example, has missed some payments, we need to find a lender who happy to take this into consideration. So it's a lot of factors we build up. Who is the best for this? Who the best lender for this client? Depending on his requirements and needs.
Understood. And the other question is, if the client pays 20% as a deposit or a contribution, yeah, but they're not able to provide sufficient evidence for the remaining 80%, what can you do in that circumstance? So
usually, as I said, it depends on the situation, and if they're buying a house or they buying, so we can get them up to 80% as well, which country they come from. So the lender as well look for the risk factor. They will look for the client's income, the other commitments. It's a lot of factors. Then we will check, but the only things, if they're paying just 20%, we need to look for other options for them. Either if they have shares, example, they can sell it to pay the rest, or we can release equity from if they have an asset. And this is what I'm doing for one of my clients now who want to invest because it's a very good opportunity. They can find good investment. So he's releasing equity from his two flats to buy a new one without putting any other cash from his pocket. This is what we can find solutions around, or a gift deposit as well. So if he has a family around, father or whatever, they can gift a deposit for them for the rest of 5%, which I did for one of my clients who had before the proof of deposit and suddenly spent it. So his father had to help him with the rest. But yeah, we can find a solution. It depends what's the client situation, and we just try to tailor something for the client.
Thank you very much, Beya. That's great. And final question for Mark from Benham & Reeves. Does Benham & Reeves offer short-term tenancies or just long-term tenancies?
Good question. So when they say long, short-term, do they mean night by night, or do they mean week by week or 3 months or that length. Obviously, short term for us means a variety of things. We do have a very small short let business in terms of helping clients who want to use a property during the year, and then they want to use it, let's say, for May, or they want to use it in August. We rent the property for the rest of the year, or we manage it for them and then rent it for that, and then they use it. If alternative, you mean you're going to use it for 90% of the year and you might want to rent it for a week there or a week here, yes, again, we can help you. It is a small portion of our business, because what we find, if a client wants to live there permanently and then they want to rent it for the periods they're not there, let's say, I don't know, a couple of weeks here or a month there, the problem with that is the people that are going to come and stay in your home, because it will be your home if you're living there permanently, or if your children are staying there because they're being educated. A good example I get asked all the time is my children stay there during the school year. They're not there at Christmas, they're not there at Easter, and they're not there for 2 months in the summer because they come back home to wherever they're going to be, and I want to let it during that period. Sounds great. The reality is that the people that are going to use that are treating the place like a holiday home, so the wear and tear is incredibly high. And maybe you think maybe some people's children don't treat it as well as they can. However, they have to take all their belongings out, and they have to store it, and they have to clean the apartment up and get it ready. And of course, we do that, but what we invariably find is the hassle that goes into doing it ends up not being worth it. And if it's your own home and you're going to be out of London for X period of time, to get all of your personal belongings, whatever it is, pictures on the walls. Are you happy if someone accidentally, falls over, or it falls off the wall and smashes, or something happens, not because people are malicious, just because these things happen? Then if that's going to upset you, then you don't want to be renting it. And for clients, on the other hand, who want to use the apartment during the year, when they come to London, because a lot of people want to come to London and be here for the summer or whatever, again, what we find with that is that the hassle that goes into moving tenants in and out, because the rest of the time is long term, the income that you forego for that 2 months or months that you're in London, you're better off just having continuity of income and actually using that income to pay for a hotel. It's much better and it's much easier. However, if a client wants to short let it, the quick answer is yes, we can. And something actually I didn't mention, but I didn't talk in my talk about it, but I tell people, especially from overseas. So a lot of clients, we have a large business, part of our business that deals with this, is where a client is in the Gulf or in Asia or in Russia or in the US or in South America, because we have clients from all of these regions, and they own a property in London, and it's their home when they're in London. They don't want it let short term. They don't want anybody in there, but it's their home. So when they come, they want it to be ready. Well, in the UK, if you have a loan, you have to have it insured, and you should have it insured even if you don't have a loan. The insurance policy will insist that the property is inspected. Someone's either stayed or been to the property once every 28 days. Now, many people don't know that. Many people think it's fine, I'll just lock it up, there's a porter upstairs, if anything goes wrong, he'll help me. But he doesn't go to the apartment every day, and if no one goes in and you have a leak, and then you ring the insurer up and say, oh, I've had a leak, and when did it happen? Oh, I don't know, I just got back, it must have happened a few weeks ago because it's flooding through my flat and everything's destroyed. You're not insured. So our service that we offer is something called vacant management service, and it means that we pay the bills for you. So we pay the service charges, the electricity, the sky, all of the bills that you have, and we also send somebody once a month who goes into the apartment and checks it for you, and we send a report saying we've been there, and then you're covered from insurance. And then additionally to that, if a family's coming and they're from the Gulf and they normally bring maids with them and they bring a cook, we can supply all that. So we get it cleaned before they arrive, we hold the keys, we deal with all of that, we get it cleaned, and then we have a maid during the day if they want 1, 2, 3. I have one client who'll have 5 maids during the day, and they're there during the day to go and do the shopping, help whatever they are, take the children out. And so we provide that service. This isn't me particularly selling a service. It is a service we offer, but it's an ongoing relationship with clients. And it's important that people realise that's a requirement, because so many clients. I had a client recently that they didn't have it inspected because we led other stuff for them, and they'd found they'd had a bit of subsidence. There was a massive crack in the wall, and I think something got in through it, and they had a big problem, and the insurers wouldn't cover it because no one had been to the apartment in 6 months. So anyway, that's just an addition to that, but it is interesting for overseas people.
Well, that's great. Thank you very much, Mark. I didn't know that myself, so that's good to know. Well, look, guys, that concludes our questions and answers sessions. There are a couple of questions that have been repeated or particularly personal detail, so I'll hand those over to the panelists after the presentation, and then no doubt they'll be in touch with the people directly. But I just want to say a huge thank you from Barratt and from the international team for the panelist support today. Thank you to Jonathan for a great overview of the process of purchasing an SDLT. Beya, thank you very much for an insight into the lending market at the moment. That's really helpful. Dmitry, tax is always a difficult subject to approach, but very eloquently instructed and some great insights there as well. And Mark, thank you very much for overview of the letting market as well. And we love working with Benjamin Reeves, and we continue to look at new opportunities to collaborate. I'm very sorry to everybody who has joined us, who's been unable to leave up until now. We have gone over quite significantly, but I think everybody will agree that it was extremely valuable and worthwhile information, and certainly the questions and answers were superb. So thank you everybody for submitting. I'm just going to hand over to Asel for some closing words and final thank you to all of the panelists.
Thank you, Stuart. Thank you very much, and I appreciate everyone's time who has participated today as a panelist and also as a guest to our webinar. I would like to also ask whoever joined anonymously and has questions which we haven't answered, if you can send your questions to internationaldesk@barrattlondon.com, then we can forward those questions to our panelists and they will be contacting you as well. But it was a pleasure to have you all today on our webinar. We ran almost like 2.5 hours, and I believe and I hope this webinar was informative and productive for all of you. Thank you.
Well, thank you to the panelists, and we appreciate your time, and we'll be in touch to organise some future sessions as well. So thank you very much for your time this morning, everybody.
Thank you so much.
Thank you so much, Stuart, Barratt, Asel. Thank you, everyone.
Thank you.
So stay safe and have a great day, everybody, and we look forward to returning to business as usual.
4479016872008 is now exiting.